Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Tech stocks power Asia higher, pushing Korea's Kospi into bull market territory, even as results from Cisco and Cerebras fail to impress. Traders, meanwhile, pair bets on a September rate hike after softer US inflation, but long-end bonds are under pressure as 10-year Treasury debt sells at the highest yield since the financial crisis. And Europe's fifth heatwave of the year peaks as extreme weather hits energy networks and health systems. We'll discuss the impact on global food supply with the chief economist of the UN's Food and Agriculture Organization. Well, a very good morning. Welcome to Thursday. This is the picture in markets this morning. Asian stocks on the rise, driven by tech. The Kospi is currently higher. 3.7%. As I say, it is driven to the point of being in a technical bull market, a dramatic turnaround from last month's rout. So you're looking at SK Hynix up 5.5%, Samsung up 3.7%. So both driving up the South Korean benchmark. Futures here in Europe are also higher by 0.4%, but it's a slightly more muted picture stateside, pretty flat for S&P E-mini futures. We already saw the S&P closing near a record high on that tame CPI print yesterday, both headline and core coming in bang on expectations. Now, flip cross asset, and we've got oil edging lower today. Brent down 0.1% at 88.87 the barrel. 6 days of gains already, but now traders are waiting for signs of progress on the Strait of Hormuz reopening. Yields are a touch lower, the 10-year down a basis point at 4.67%. Mind you, as I say, we had yesterday's 10-year Treasury auction resulting in the highest yield for the benchmark security since 2007. So setting the scene for a 30-year sale today that's expected to take the highest financing rate in a quarter century. Now, we are also looking ahead to PPI data stateside later, the dollar trading in a tight range in advance of that. But take a look at the yen. 159.26 per dollar is where we trade after our scoop that Japan's Prime Minister Sanae Takaichi's government is supportive of a near-term rate hike by the Bank of Japan. Now, we'll dive into all of that in just a moment. But first, let's take a look at the risk events on the agenda for today. At the top of the hour, we'll be getting UK GDP figures for July, completing the picture for the second quarter, expected to show the economy holding up despite headwinds from domestic politics and geopolitics, of course. We also, at 9 a.m., bringing up the rear for central bank decisions, have the Norges Bank expected to keep rates on hold for a second straight meeting. And at 1:30 p.m. London time, it is, of course, US PPI, a key input into the Fed's preferred inflation gauge, PCE. So plenty ahead. Let's get started. We begin with tech stocks driving gains across Asia once again this morning. Let's go straight to Winnie Su in Hong Kong for an update. So, Winnie, what's put tech back on the front foot? It's a technical bull market in South Korea.
Yeah, exactly, Lizzie. Well, a very strong session in Asia, as you just pointed out. Now we have the MSCI Asia here up more than 1%, headed for its highest level in about 5 weeks. Now, it is all really coming from that constructive macro backdrop. We had the US CPI numbers helping investors to trim the bets when it comes to further rate hikes by the Federal Reserve, and also overall quite strong earnings from tech, as well as oil also easing some of those gains. Now, that is supportive of risk assets, especially the ones in South Korea, with the Kospi here up about 4%. Now, with that, you're also seeing tech-heavy gauges in Japan and Taiwan, also leading gains up more than 1%. Now, flip the board, I want to take you closer to look at what's going on, really the trend when it comes to Korea and Hong Kong markets, because we are seeing this correlation between the two markets. And in fact, we are seeing after that very sharp correction in Korea, it's rebounding up about 23% from its July low. And then on the flip side, you are really seeing how after that big rally in Hong Kong shares, especially in tech shares, it's kind of losing a bit of momentum, especially as investors continue to weigh the earnings from Tencent from last night, with earnings pointing to how the company is now doubling its AI spending, while the free cash flow also turning negative. So showing more concerns when it comes to how this all big spending in AI can really translate into the AI monetization path forward. Now, flip the board, we take a look at what's going on in the Japanese yen, because you just pointed out within the past 30 minutes or so, we've learned that Prime Minister Takaichi's government is supportive of a near-term rate hike by the Bank of Japan as early as September or October. So you can see that yen strengthening about 0.1% here, and investors are really betting that the Bank of Japan will have to move earlier than later. Now, markets pricing about 75% of chance for a September hike, especially when the yen weakness is really showing after that joint intervention, with the yen now right below that 160 level against the dollar. Now, the thing is, the strengthening of the yen today really is not as strong, and that muted reaction probably also shows you that investors right now want to see more than just words, but actions. Back to you, Lizzie.
Really interesting stuff, Winnie. Thank you so much. That's Bloomberg's Winnie Su in Hong Kong. Well, let's turn to the US now, because a $42 billion auction of 10-year Treasuries fetched the highest yield for the bonds since the global financial crisis in 2007 yesterday, setting the scene for a 30-year sale today that's expected to take place at the highest financing rate in a quarter of a century. Now, it comes despite July's US CPI print showing inflation softening, with investors paring bets on a September Fed hike. So let's go to Sam Unstead for more. He is our Bloomberg Markets Today editor. Sam, the pressure's off the Fed officials who wanted to wait for more signs of progress on disinflation, you might say. How could today's PPI print change the narrative? Good morning.
Yeah, we shall see with the PPI print. But so the CPI print yesterday, relatively benign. So, it certainly didn't provide any kind of upside surprise that would damage the path, or make the path even more hawkish for the Fed. But also it was, almost everything about it was pretty much in line. So it takes a little bit of pressure off, but only a little bit. And you were just mentioning there with yields on the bond sale yesterday getting to sort of multi-year highs, but a 30-year sale later today. It's a kind of global event, that's happened for bond yields kind of everywhere. And what's been very interesting, particularly at the long end, and we've got some really nice stuff on the Markets Live blog today about this, is the yields going up at the long end, almost and correlating quite closely with oil prices. So there's an increasing concern, it seems, that oil prices are going to continue to be a kind of inflationary risk and an inflationary pressure much further out than may have initially been the case.
Well, yeah, how much is that also to do with the AI investment story? As you say, it isn't unique to Treasury auctions that you're seeing higher yields. What are the biggest drivers right now of higher yields?
Yeah, Lizzie, I'm in Hong Kong at the moment, normally in the UK, and you and I have seen many times yields on UK bonds hit multi-year highs. So it's something we're quite used to seeing, and it has happened across the board. And a lot of that is more to do with, some of this is to do with AI hyperscaler spending. We've had the earnings season show that there's just an enormous amount of money being poured in. Also, that's feeding much more into credit markets, and so that's having an effect, certainly. But oil prices as well remain a really key driver of all of this, and this continued question of how long will they remain elevated for, how much will that change the picture in the second half of the year and into 2027 as to what central banks have to do. So it's a increasingly complicated, but as is sort of the case with most markets these days, it's a question of oil and AI, and those two things remain the kind of main drivers.
OK, Sam, thank you very much. That's Bloomberg Markets Today editor Sam Unstead out of Hong Kong. And we will be talking tech later on in the programme. But still ahead, we're also going to look at this heatwave baking Europe this week. Maximo Torero, chief economist at the Food and Agriculture Organization of the United Nations, will be joining us to discuss the impact of extreme heat on food prices. But first, the US bets on economic pressure as it looks to strengthen its hand in the conflict with Iran. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Iran has reorganized its military in a bid to be more aggressive abroad, with an advisor to Tehran's new military commander telling state TV it's shifting to an offensive doctrine. Now, it comes as talks with the US generate little sign of progress, with both sides claiming control of the Strait of Hormuz. So let's get the latest now. We can go to our Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar. Abir, good morning. What does Iran's shift mean for the conflict and also potential negotiations as well?
Good morning, Lizzie. Well, it's not just Iran's shift, right? Because we're also seeing the United States shift its stance. President Trump saying that he is now resorting to having economic pressure have its way and let Iran succumb to the economic pressure that it's been exposed to over the past 6 months or so. And then when it comes to the Iranian side, what we have is that we've reported on your show and others that Iran has promoted, or the government, Mustafa Khamenei, the new supreme leader, has promoted those hardliners into the echelons of power over the weekend. Now, what this could mean for the wider negotiations, still a lot of unclarity around just what exactly they would want. But then one starts to think that Iran is probably preparing itself for a situation where this could get much, much worse. Now, what we have from Mohammad Reza Naqvi, who is a general in the Islamic Revolutionary Guard that was and is who advises the force's new commander. Essentially, he went on state media and he said this, Lizzie. He said the raft of top military appointments by the new supreme leader marks a shift in the offensive doctrine. Now, what exactly that means, we're not entirely sure, but what we know is that those reshufflings that we had seen possibly mean that Iran is preparing for a situation where things could go awry, where things could come into further military intervention by the United States, and then some hard lines would have to be pursued. But then what you get from the American side is that, as a matter of fact, now President Trump, again, as I have mentioned, wants Iran to fall into this, the economic situation. We've reported that inflation levels year on year are at around 80%. But if the U.S. is betting on that, that is, according to a lot of analysts, a lost fight, because Iran has been exposed to this economic pressure at the beginning of the year, Lizzie, with the protests that have started at the beginning of this year again. And that really hasn't shifted the needle much. And so that is what we had reported on when it comes to those reshufflings, those reappointments. But then what we have focused on multiple times and what we continue to focus on are the side negotiations that are taking place with Oman to find a mechanism to reopen the Strait of Hormuz. Just for clarity, we're still nowhere on that. We still don't have further details about when exactly that would be announced. We're still waiting for that formal document, Lizzie, from both sides to just understand better what exactly will happen to the Strait of Hormuz as we, of course, monitor the situation in the Red Sea, where the Yemen-based Houthis had targeted a vessel to the Yemeni government, killing people. The AP reporting that yesterday. Some of those people were reportedly Pakistani. Pakistan is, of course, a mediator in all of this. So the situation is messy, keeps getting messier in the Middle East, Lizzie. And for now, what we're holding on to is that document that is apparently in the final stages. But then you're looking at Brent crude prices. They were about 1% lower when I woke up in Dubai this morning. That price is now moderating, and it wouldn't be very far-fetched to see Brent reversing those losses into gains very close to $89 on the barrel, as you can see.
Yeah, 88, 85 is where we trade right now. Abir, thank you so much for the update. And Abir has been having a conversation with the Minister of Foreign Affairs and Expatriates for the Palestinian Authority. It runs part of the West Bank. It says a change in Israeli leadership alone won't be enough to alter the outlook for peace. Now, Abir spoke exclusively with Varsan Shaheen ahead of the upcoming elections in Israel, and she urged a total change of course in Israel's West Bank policy. So let's take a listen.
You can change the faces as much as you want. If the policy remains the same, then the issues remain the same. They might be beautified a bit. A new government might be doing the same, but in a different manner. What we want to see is a change of course. We want to see a government that is a partner for peace, a government that sees that it is in the best interest of Israel and the region to go into a political path that would lead to peace in the area.
So you think that even if Netanyahu goes, the situation or the outlook on things when it comes to the situation domestically, internally, that will not change? It's just a change in the face. The policy would remain the same.
If Netanyahu goes and the group with him that have a great influence on this government, and we've seen it. I mean, you have a government that is very much influenced by the settler movement, by settlers themselves who are ministers sitting on the government. Things might calm down a bit. But the issue of this expansionist and annexationist policy of Israel that needs to change so that we see a genuine change on the ground.
Okay, so therefore, have you had, or has the PA had any conversations with some of the opposition leaders?
I'm not aware if there are any direct discussions with opposition leaders, but I know there are Arabs in the 1948 areas in Israel proper that have discussions all the time. And in the final analysis, as I said, we look forward to a government that will extend its arms towards something that respects the rights of Israel's neighbors and respects the rights of the integrity of Israel and its living in the area as a normal country.
That was the Palestinian Authority Foreign Minister Varsan Shaheen speaking to Abir Abu Omar. Now to some other top stories that we're following for you around the world this morning. President Donald Trump has been sued by two media organisations over Trump Media's plan to sell faster access to his Truth Social posts. Freedom of the Press Foundation and The Intercept Media have asked a New York court to block the plan, calling it unconstitutional and profoundly corrupt. Trump Media says information from the president is disseminated by countless platforms and news outlets, many of which offer subscription APIs. Elsewhere, White House Press Secretary Caroline Leavitt will step aside from the role later this month. President Trump posted on social media that Leavitt would now be one of his top outside advisers. In her own post, the press secretary said that she was grateful to serve in her role, but that it was taking a toll on her family. The move deprives Trump of one of his top spokespeople less than 3 months before the US midterm elections. And Bob Iger and Josh Kushner are buying the Los Angeles Lakers basketball team for what Bloomberg sources say is a record-breaking price of $12.5 billion. Mark Walters' decision to sell comes as his firm, TWG Global, looks to raise cash. Well, those are some of our top stories from around the world this morning. Coming up on Daybreak Europe, soaring container rates proving a tailwind for Maersk. We'll preview earnings from the shipping giant next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, analysts expect results from the shipping giant Maersk in the next hour to be boosted by Far East demand. Bloomberg Intelligence says that the firm's full-year outlook is clouded by the risk of shipping routes normalising in the Middle East. Let's go now to Copenhagen. We can speak to Bloomberg's Sana Vash. She's on standby for us, waiting for these earnings. So, Sana, good morning. Let's just talk firstly about the geopolitical impact on Maersk. How badly is it expected to hurt the company when, as we all hope, of course, happens soon, the Iran war ends? Do analysts basically think that earnings are just going to drop off a cliff at that point?
Yeah, I mean, how badly peace in the Middle East will affect Maersk's earnings, that is a question that analysts and probably Maersk itself has been grappling with for several years now. I mean, before the Iran war, it was the conflict in Gaza. And there's no doubt that the situation there, the conflicts and the disruptions in the Middle East, that is providing a boost to Maersk's earnings. because it's forcing its ships to sail longer routes. That's tying up capacity, and that is pushing up freight rates. Whether earnings will drop off a cliff is, that is unclear. But what I would say is normalization or return to normal shipping routes is probably going to take a while. I mean, Maersk has been talking about a gradual return to the Red Sea for quite some time now, and it keeps on facing setbacks and other challenges, so there's no doubt that will take some time, and it will be a gradual return once we see the situation improves there.
And it's also in the crosshairs of the trade war, Sana. So, to what extent is it likely that tariffs will have boosted Maersk in the near term because of front-loading, but then will hurt Maersk further out now that the White House is rebuilding that tariff wall?
Yeah, that is definitely a potential challenge for Maersk. The company, back in late June, it raised its full-year guidance, and one of the tailwinds it mentioned there was a resilient demand for its services, and especially strong exports from the Far East and from China. And there are indications that some companies are front-loading, as you say. They're moving forward shipments and stocking up in order to do that before tariffs and other changes come into effect. And of course, that might mean that some of that demand disappears later on. But it's still unclear how much of this front-loading is benefiting Maersk at this point. And that's, of course, definitely something that we'll be looking for answers about that or indications about that in the earnings and in conversations with the CEO today.
Yeah, and really interesting to see how the company is transforming from a pure shipping company into something broader. What do you see as the biggest potential other headwinds for Maersk in the second half of the year?
Yeah, I'd say, the two challenges that we already talked about are key: a return to normal shipping routes and lower freight rates, and also potential weakening demand because of front loading. But also then over the longer term, I'd say a key challenge for the shipping industry at large is that it still faces a structural overcapacity problem. There are more ships coming into the market, and we're still kind of waiting to see how that plays out. Definitely an ongoing question and a concern for the market, for Maersk and for other shipping companies.
OK, Sana, thank you so much for that preview. And, of course, those earnings will be coming out later. That's Bloomberg's Sana Vass. We'll be speaking to the CEO of Maersk later on at 7:40 a.m. on the opening trade. So that conversation with Vincent Clerc later on this morning on Bloomberg TV. Now, to some other top stories we're following for you in the corporate space this morning. Cisco shares fell in late trade despite earnings topping Wall Street estimates. It's forecast $7.5 billion in sales tied to the AI data center boom this fiscal year after amassing $9.3 billion over the past 12 months. Now, Cisco says demand tied to AI data centers remains robust, though much of its business still comes from traditional networking products. Elsewhere in the tech space, Cerebras tumbled in after-hours trading after the AI infrastructure firm topped average revenue estimates, but projected slower growth than some investors had anticipated. The forecast was part of Cerebras' second-ever quarterly earnings report as a publicly traded business, which saw its hardware business eclipsed by its cloud computing services. So that's the latest in tech earnings. But coming up here on Daybreak Europe, we shall turn to the weather. Europe's fifth heat wave of the summer set to peak today. We'll discuss the impact of extreme weather on food prices, energy security and inflation with Maximo Torero, chief economist at the Food and Agriculture Organization of the United Nations. That's next. And this is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Tech stocks power Asia higher, pushing Korea's Kospi into bull market territory, even as results from Cisco and Cerebras fail to impress. Meanwhile, traders pair bets on a September Fed hike after softer US inflation, but long-end bonds are under pressure as 10-year Treasury debt sells at the highest yield since the financial crisis. Plus, Europe's fifth heatwave of the year peaks as extreme weather hits energy networks and health systems. We'll be discussing the impact on global food supply with the chief economist of the UN's Food and Agriculture Organization. Well, a very good morning. 6:30 a.m. here in London if you are just joining us. This is how markets are shaping up this Thursday morning, and Asia stocks are up over 1% as things stand, driven by tech. As I say, the Kospi up 3.7%, but the likes of Samsung and SK Hynix both up more than 4% as things stand. This is the point where we see the South Korean benchmark in a technical bull market, a really dramatic turnaround from last month's rout. And indeed, it is futures higher across the board around the world. We have Euro Stoxx 50 futures up 0.5%. Not so much enthusiasm stateside, but we already saw the S&P closing near a record high because of that tame CPI print yesterday. Bang in line at both the headline and core levels. Now, let's turn over to the cross-asset picture. We were talking about the latest in the Middle East with Abir Abu Omar just moments ago. Brent crude now weaker, 0.1% at $88.89 the barrel. We're waiting for signs of progress still on the Strait of Hormuz reopening. 6 days of gains for oil, and so just flipping into the red now. Yields, therefore, a touch lower. So the 10-year Treasury yield down 2 basis points at 4.67%. We did have that 10-year Treasury auction yesterday, resulting in the highest yield for the benchmark securities since 2007. So setting the scene for a 30-year sale today, and that's expected to take place at the highest financing rate in a quarter century. Now, of course, we are looking ahead to PPI as well, data later stateside. The dollar trading in a tight range in advance of that. On the flip side, we are looking at the yen at 159.36 per dollar, and this is after our scoop that the Japanese government is supportive of a near-term rate hike by the Bank of Japan. Now, let's turn over to the front pages this morning. We'll kick off with the Financial Times. It leads on its reporting that Anthropic investors expect the AI startup to float at a valuation of $2 trillion or more in October, more than double its current value. And if we turn over to El País out of Spain, it's focusing on yesterday's eclipse. Did you watch it? Their headline reads, "The eclipse captures the heart of Spain." Were you out there with your cereal box, I wonder? I wasn't. And here in the UK, let's look at The Guardian. It leads with a warning from the country's nursing union that hospital staff are fainting in what they describe as inhumane conditions due to extreme heat. We'll be talking about the weather again in just a moment, but you can get a roundup of the stories that you need to know to get your day going in today's edition of the Daybreak newsletter, which, as ever, terminal subscribers can find by going to D8YB Go. Now, as another heat wave bakes Europe this week, water levels on Europe's major rivers, the Rhine and the Danube, are dwindling further. Companies that rely on those key waterways are being forced to rapidly adjust to keep goods flowing. And Bloomberg's chief Europe correspondent Oliver Crook, I'm pleased to say, joins us now from the COP in Germany, the Rhine's shallowest point. So, Ollie, good morning to you. You've got the river behind you. What kind of economic hit are we looking at here?
Yeah, absolutely, Lizzie. So this is a sort of a kind of obscure town here in Germany of Calw, but it sits right kind of in the middle of the Rhine River, which is, of course, one of the most important waterways within Europe, and particularly for German industry. It services all the southwest companies there of Germany, and attaches effectively the North Sea through the Netherlands, through France and Germany, and into Switzerland. And, of course, there are canals that also connect it to the Danube, which then flows towards the Black Sea. So one of the most important waterways here in Europe. And what we've got here in Calw is the shallowest point between basically in the center of the Rhine River. And what we've been seeing are historic averages of all these sort of records being broken of the shallowest level we've reached here. You can see behind me there, this is the water gauging station tower there, which reads the number of centimeters of clearance that there is. It's reading at 11 right now. We should say that the former record was 25 centimeters. That was set back in 2018. And we are now hitting new records basically every day this week. We're now at 11. And the issue is, Lizzie, is that those records were made last time time in 2018 back in October. We are now only in August, so we may be at the very beginning of this. And what it will mean effectively, Lizzie, is that if these ships cannot cross this point, it effectively bisects the Rhine River, and that is going to cause a number of issues for a number of different companies. ThyssenKrupp, BASF, of course, Rheinmetall, named after the Rhine River itself, are all companies that are situated across this river. We should also say that it'll have an impact on the German economy. We've heard some estimates. We're a little bit skeptical potentially of the estimates because this is very hard to calculate, but we've heard from ING saying that this could cost German growth 0.3% of growth this year, which is close to what we're expecting, about half of German growth this year. So it's something we're watching very closely. Of course, we're going to get some earnings from a number of companies, including ThyssenKrupp today, so we'll see what commentary they have to say and what the effect could be for the company itself.
Yeah, it will be really interesting to hear from that company. I have to say, Ollie, I'm slightly disappointed you're not in the river with your ruler and your wellies for us, but good that the tower can tell us the height of the water levels as things stand. Look, if this is going to be the new normal, are governments and logistics companies making long-term adjustments to adapt to it?
Yeah, absolutely, Lizzie. So this is something we've seen adjustments already be made back from those records we reached back in 2018. So you have a number of these companies. So you'll remember back in 2018, actually for BASF and ThyssenKrupp, this was one of the factors that actually contributed to them declaring profit warnings as a result of the water levels being too low and them not being able to move that inventory. That being said, we're already getting some statements from BASF, for example, saying that they may actually not rule out a force majeure potentially this year because of the low water levels. We have ThyssenKrupp saying that they're having some issues getting some of the raw materials up and down the river, so it's still going to have an impact. But also, that being said, it's having an effect on some government policy, Lizzie. We've been hearing from a number of the German states, some of the most economically productive. They have basically suspended the ban on driving trucks on Sundays as a consequence of this issue of water supply and not being able to move things up and down the river in order to allow those trucks to drive around Germany on Sundays, which is something that they traditionally ban. So again, it's having effects on these companies. It's going to have an effect on the economy of some kind. But again, Lizzie, the big question is going to be, how long does this persist? Will this go for a number of months? In which case, this is really unprecedented, and this will be really new territory for the economy.
Ollie, fantastic reporting. Bloomberg's chief Europe correspondent, Oliver Crook. Stay cool. We appreciate it. Thank you very much. Now, the UN Food and Agriculture Organization says that the benchmark measure of world food commodity prices edged up in July. The summer's heat waves and the soaring cost of energy added to those food price pressures. And I'm pleased now to welcome the FAO's chief economist, Maximo Torero. Maximo, good morning to you. Thank you so much for joining us. Is this the new normal?
Good morning. A pleasure to join you.
Well, are these numbers that we're seeing going to last? Is this the new normal, Maximo?
Look, things are getting more complicated every day. No, we have the problem of the Strait of Hormuz, which restrict between 20 to 30% of the key inputs used in agriculture, and which is affecting yields. Then we have the problem of the Black Sea, which is now moving at 1/3 of the capacity of the mobility, which affects wheat, especially coming from Ukraine. And we also have the climate issues, El Nino, and the high temperatures that we're observing in Europe, which is already affecting many commodities. But despite this, we have good harvest from the past, which is allowing us that we are more or less in a stable situation, although prices are starting to increase in the commodity markets.
And which crops have been most affected by the heat waves, the wildfires, the droughts, the falling river levels that have resulted?
Yeah, the major crops being affected, the first one is wheat, which has a 4.3% below last year forecast. Maize remains stable. Rice is really affected, not only for what is happening in parts of the world and because of the Strait of Hormuz, especially because of India and delay of the monsoon. And also, of course, if we look to the case of Europe, we have seen a significant increase in temperatures, which JRC has reduced the winter crop forecast by 1 to 4% by late July, leaving the aggregate European yields 1% below the 5-year average. So summer crops, especially maize, sunflower, where the monthly revision reached 6 to 7% less. So these are the commodities which are mostly affected in Europe.
And if we layer in the impact from the wars in the Middle East and Ukraine, the impact on shipping through the Strait of Hormuz and the Black Sea, Is the world adapting? When you look at your data, what does it tell us about the pass-through to food prices then?
Yeah, exactly. So the challenge that we have is not only the closure of the Strait of Hormuz, the problem that we have in the Red Sea, and the congestion that is being created also in the Panama Channel, which is increasing the rates of the vessels to go through. All this is affecting planting season, is affecting input use, will affect yields, is already affecting commodity prices, which are ready to increase, especially wheat and rice and soybeans. And this will transmit into food commodities. So the commodity price, the wheat is one thing, the bread is the other thing, the pasta is the other thing. That takes between 3 to 6 months to transmit. So the major impacts in the markets, in the supermarkets, will be felt in the next months, in October, November, December, and especially in 2027, because of this delay in transmitting the impact from the commodity price to the food commodity. Now, if that happens, if there is no improvement in the next months, that immediately impacts food inflation, and that will impact overall inflation. Despite this, we have seen in the last reports a reduction in inflation in Europe and also in the US, but this is not reflecting yet what will be transmitted by the end of the year.
OK, which points to stagflationary risks, of course, for economies around the world. But let's also talk about the human impact here, because notably your latest report shows global hunger actually in retreat for the third year last year. Is that trend likely to reverse under all of these pressures?
Now, remember, this reflects the numbers for 2025. So the SOFI report of 2026 is reporting on hunger on 2025. If we project the impact of the Strait of Hormuz, for example, by 2030, it means 20 million more people in hunger. So the contrafactual will be without the Strait of Hormuz, without the Niño, without the shocks, then the situation will have been even better. But the situation, because of the shocks we are facing today, could deteriorate enormously.
And where in the world do you think will be hit hardest by those headwinds then, in terms of the hunger picture?
Of course, normally the most vulnerable will be the food importing countries, because they will have to pay higher food prices for these commodities. But also now we have a significant impact over farmers because of the significant increase of the price of inputs. So all the fertilizers, all the nitrogen has increased, the hybrid seeds has increased their cost. So fertilizers around the world are facing significant challenges. But on the consumer side, of course, always the most vulnerable will be the ones that have the biggest import bill, and those will be in Africa, in sub-Saharan Africa especially, and in some parts of South Asia.
So, of course, apart from finding a path to peace, what would be your biggest policy recommendations to prevent such a bleak scenario?
So right now, our policy recommendations are twofold. One is for the conflict situation. The best solution, of course, is to open the strait and let vessels move to resolve the problem in the Red Sea and to improve the situation in the Black Sea, because we want that wheat from Ukraine to go out. On the side of the climate issues, and especially El Niño, which will be affecting most of the key exporting countries in high-value commodities, I mean in South America, Peru, Ecuador, Colombia, and also the cereal countries, Brazil, Argentina, Paraguay. There we are proposing an enormous anticipatory action as soon as possible to prepare for the areas where there will be floods and for the areas that there will be droughts. And that's something that could minimize or reduce the potential impact, what we call absorption capacity. But there will be an impact for sure. The goal is to reduce as much as possible the impact so that we can at least stabilize as much as possible the markets.
OK, Maximo, really great to hear from you this morning. Thank you so much for making time for us. That's Maximo Torero, Chief Economist at Food and Agriculture Organization of the United Nations. Now, coming up on Daybreak Europe, UK GDP data for the second quarter is due in just a matter of minutes. We'll discuss how the economy is holding up against all those headwinds next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, in just under 15 minutes' time, we'll be getting the latest UK GDP figures, and they're expected to show that Britain enjoyed another quarter of healthy economic growth. The drivers: World Cup football, multiple heat waves, and possibly a spurt of front-loaded activity that's become a familiar feature in recent years. However, forecasters and the Bank of England think that the underlying picture is weak and possibly even stagnant as the full impact of the Iran war filters through. So let's get a proper preview now. We can speak to Matthew Bunny, UK economist for Bloomberg Economics. Matt, good to have you around the desk. It looks like pain is in the post for the UK economy, as I say, even if it's unlikely to show up in today's figures. Is that how you would characterise it?
So we've penciled in 0.4% quarter-on-quarter growth for the second quarter, which a straight read of that figure would suggest the economy is humming along pretty well, despite pressures from the Iran war, domestic political upheaval. That said, as you've outlined, we think the underlying picture is weaker. So, part of the strength we've seen in this figure will just be arithmetic from the fact that we had a strong Q1 carrying over into Q2, and there's also these temporary factors that you've outlined. Looking ahead, domestic utility bills have reset. We've seen, obviously, this political upheaval and the labour market is loosening. All of those factors are going to keep growth weak. That said, these figures are unlikely to sway thinking at the Bank of England, where the focus is squarely on inflation.
OK, well, you mentioned the political backdrop. How much of a factor is that when it comes to economic momentum going forward?
So, greater domestic political uncertainty will be a headwind for growth. There is still question marks about exactly how Andy Burnham's fiscal policy package will look. So we know he has ambitions for bigger spending. He's spoken about social care reform. He's spoken about more council house building, amongst other things. So the question is how all of this will be funded. So will this mean more tax rises, spending cuts elsewhere, or more borrowing? Ultimately, Burnham faces trade-offs in any of these choices. So we'll be looking at the October 28 budget for more.
But the gilt market so far, Matt, doesn't seem to be all that worried. It seems to be giving Andy Burnham quite a lot of leeway, right, despite the vagueness of what his team are saying when it comes to the fiscal picture. Yes, they're saying that credibility fiscally is the top priority, but are we just basically seeing a honeymoon period that after October 28th could end fast?
Possibly. So, we think there are probably three possible reasons why markets to date have given Burnham the benefit of the doubt. So, while he has clearly signalled higher spending, it's worth noting that much of the announcements to date have been these kind of breathing space policies he's spoken about that, while have political appeal, these kind of cost of living measures to date actually haven't been that material in terms of spending.
In other words, they're tinkering.
Exactly. Then it's also worth saying that a lot of Burnham's bigger policy ambitions might take longer to actually materialise. So we still may not even see those appear later this year. So things like social care reform, council house buildings, these are long-term projects. And of course, his Chancellor pick, Healey, has continued to underscore that fiscal discipline will be at the heart of the budget. I guess we'll have to wait and see if that actually materialises.
We will indeed. All right, Matt, thank you very much for the analysis. There's a great piece from Bloomberg Economics all about that very subject of why the gilt market's been being so forgiving to Andy Burnham so far. Do give it a read. It's on your terminal right now. But for now, Matt Bunny, thank you very much. Now, let's turn to some other top stories that we're following for you this morning. Staying in the UK, estate agents are even more gloomy about London house prices than at any point in almost 3 years. The Royal Institution of Chartered Surveyors says that its gauge of expected prices over the next 12 months fell to -23 in July, the lowest since October 2023. London continues to trail the national market, where expectations remain positive. Elsewhere, Bloomberg has learned that former IMF director and Bank of England Deputy Governor Manoush Shafiq has left her post as Chief Economic Advisor to the British Prime Minister. We're told that the former BOE Deputy Governor, appointed by Keir Starmer last year, has not been kept on by Prime Minister Andy Burnham. And elsewhere, Colombia's earthquake death toll has risen to 265, with nearly 3,500 injured and 500 missing. The country's president has moved to declare an economic emergency after the 7.4 magnitude quake, giving his government temporary powers to issue economic and tax decrees if approved by the full cabinet. Well, those are some of our top stories from around the world this morning, but coming up, plenty more. We'll bring you some terminal charts to frame your day ahead. Stay with us. This is Bloomberg. Good morning from London.
Today's CPI print puts the bar for a Fed hike much higher than the bar for a hold.
I don't think this really resolves a lot. I think our lean is still that the Fed remains on hold in September.
It was comforting just that it was flat, but I think the most important issue out there is that the service sector inflation bounced back a bit.
We've essentially got Teflon inflation in America. It won't stick, and it won't stick because you've got this, you can't get a price wage spiral going if the wages won't react.
Some of our guests from across Bloomberg TV reacting to that US CPI print yesterday. And here you can see, in fact, yes, it was a subdued print, but let's remind ourselves, the Fed target is 2%, and we've been above that level for 5 years now. You'd think that the new Kevin Walsh as Fed chairman would be, if he's serious about 2% as a Fed target, actually more committed to hikes, perhaps. That's what John Authors is arguing in his column this morning. But flip the board over, and you can also see that this was the 4th straight month that wages rose less than CPI inflation. Perhaps that will have political blowback at the midterms later on this year. Now flip the board one more time. You can see how that print changed Fed bets falling as a result of the July print, given it matched the forecast. But economists watch percentage changes, consumers watch the price. So let us see if there is more of a reaction to this politically. Now let's look at the risk events on the docket for today, because we're going to get more inflation data out of the US later on today in the form of PPI for July stateside. That number dropping at 1:30 p.m. London time. We also, in just a few minutes, have second quarter GDP numbers for the UK, and we'll also have a Norges Bank decision at 9 a.m. London time. But just breaking across the terminal, we also have results from Maersk. We were previewing them from Sanavas out of Copenhagen. We are seeing that Maersk has boosted its underlying EBITDA guidance for this full year, the guidance beating the average analyst estimate. And so $10.5 billion to $12.5 billion is the figure, beating the estimate of $9.27 billion. A second quarter revenue coming in above estimates, and second quarter EBITDA also beating estimates there. So we will be hearing from the CEO of the Danish shipping company later on Bloomberg TV, speaking to the opening trade team, Vincent Clerc, coming up alongside the CEO of Vestas, Henrik Andersen, as well. Skylar, Tom and Guy will take you all the way to the start of the European cash trade, so stay tuned. This is Bloomberg.